It was TradFi that created the 2000.com bubble. It was TradFi that created the real estate bubble. At the end of the day, humans are emotional, they're greedy, and I will say having some way to value protocols, right? And obviously, a cash flow based DCF model is one way to do that. That would tether some valuations closer to reality, but I don't think TradFi entering the market is going to lead to less bubble like behavior in the long run.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today I'm joined by Danny, Ryan, and Daniel Shapiro, a new first-time guest from Blockworks Research to talk about all that's happening in the markets and across crypto. First of all, guys, welcome back. How are you all doing?
Fantastic.
Doing great.
Yeah, doing well. Happy Monday, everyone.
Happy Monday, everyone. Just as a reminder, if you're a listener, it is actually Wednesday. What are we all looking at in the markets? What's happening?
Yeah, I think one to bring up quick is lots of activity on Polymarket. There's been a lot of excitement over the past week. Political related activities, people trading election outcomes, Biden dropping out. There was a lot of excitement and movements in the pricings of these events over the weekend and over the past week. So we've seen a lot of excitement around Polymarket, and I think we've seen people proclaiming on Twitter that it's an app with like the most clean and secure PMF. I think there's maybe some still questions there longer term about that, post election. Does that remain? But definitely some excitement around it.
How much do you think other ecosystems have offered Polymarket for them to launch on? Like, how often do you think that's happened so far? Because I feel like it's definitely been done, right? Like, if I'm an EVM, I'm going to Polymarket probably like once a month and saying, hey guys, actually we have this huge grant program specifically for you. Why don't you come and launch over here? Okay, maybe this is too risky of a topic.
Tough to say. I don't have any inside knowledge, so I don't know. But I think your point is fair. Like, if I'm running Base or Blast or any of these chains or Solana or any of the main competitors these days, like you see the success and the activity there, and it's the same with all these apps that are really popular. If you're the chain that has it, you get a lot of activity and excitement and fees and user metrics around that. So it's certainly valuable. So to your question on what they're throwing at them, I mean, who knows?
One more thing I have with this one is PMF. Does Polymarket have strong PMF, or does it just have more PMF than everything else that we're like, wow, this one has incredible PMF?
Yeah, I don't think that it's clear. I mean, clearly, like I've said in the past, this has been one of the most successful applications this cycle, and great. Like, that's fantastic. It fulfills its duty, but it's participating in a market that historically has not been, hasn't reached escape velocity, let's say. There may be some reasons for that. You can think of like capped payoffs. You can think of like it's really not necessary, like within a portfolio. Like, it's not a very obvious hedge for like a TradFi guy, right? Like, you can probably get more interesting, you can express more interesting hedges in traditional financial markets than like directionally betting on a candidate or on some event. So, I'm not exactly sure why prediction markets haven't hit escape velocity quite yet, but my kind of hunch is that the way to differentiate itself, Polymarket in particular, is to, like the way DEXs win, compete on listings, different markets, unique markets. It's kind of clear to me that the most successful DEXs have had the broadest listing strategies. I think back to FTX and now Hyperliquid. It's how Binance kind of rose to fame, like enabling users the ability to get interesting and differentiated exposure as opposed to like copy pasting everything from Predicted, which is another popular and successful prediction market, like I think is the best strategy going forward. What products they'll offer like after election season, like TBD, not sure.
Yeah, I think actually the first application to ever launch on Ethereum, I believe, was Augur, which was a prediction market, and it never really took off. I think to answer your first question, maybe they're waiting to for some interoperability infrastructure to become more developed and maybe have a cross chain strategy as opposed to just separate deployments on multiple chains. With respect to their product market fit, personally, I think it's very clearly the election that is generating that hype right now. I think the problem with prediction markets historically is there's just very low liquidity, and that drastically limits their ability to be adopted. And if you think about, you could say people putting risk on in the markets anyways. Typically, you have some type of thesis, right? Like, I think this president's going to be this president, and so therefore these assets are going to do well. And so there's other ways to um, I guess, represent your thesis and different assets you can buy than directly, you know, betting on some type of prediction market outcome. So I think it's naturally pretty idiosyncratic events that you can even bet on, and that kind of limits their growth. So we'll see. I would expect post election for it to the hype around it to kind of die down, but I don't have strong alpha there per se.
Yeah, and in crypto, we have a very clear way of expressing that bet, which is a meme coin on Solana that's misspelled the Spoderman way for political candidates. So we'll see. I think people are becoming increasingly political, potentially because everybody's online all day. So I don't know how, like you said, I think maybe after the election cycle, we'll see. But I mean, until then, I think everybody's just constantly trying to put some form of bet on a candidate. So
Yeah, I was going to echo the same point. I think really to measure their lasting success and the question around PMF is, post election, how does that success continue? If metrics drop off because that was the main reason people were going there, then they either need to find additional things to bet on outside of elections. Maybe the Olympics, maybe big sporting events, but you're competing with sports betting apps in that case. So there's a lot of competition around these types of things where, in comparison to elections, which previously have not been so explicitly traded.
Yeah, there's an interesting compounding trend in the market where, look, we're like financializing these like we're financializing like world events and like social happenings. So, like for example, post Trump assassination attempt, if you went on to pump.fun and spread your bets accordingly, like you probably did very well. Like I know that that's not where my head was at, but some people's were, and there's evidence of people doing very well post that on chain. There's also like this morning we're watching, I think it's like this new laser eyes MAGA meme that different people in technology are using as their profile pic on Twitter.
dark matter.
If yeah, something like that. Like if you bought, and again, if you're oriented this way and your first thought was like, okay, this is an emerging trend, like go to pump.fun and do that thing, buy whatever token represented that kind of social movement. Like again, you did pretty well today and yesterday. So there is this kind of like emerging financialization of like social happenings, and like Polymarket like kind of fits that trend. And as like the cycle carries on, and the longer we go without recession, like I assume this activity is going to compound. You're seeing that market develop on the pump.fun side, where pump fund tokens represent, Danny, we were looking into this, anywhere from 20 to 60% of Solana's on-chain volume in a given day. Like Polymarket can definitely catch some spillover from that like emerging on-chain meme market. We're already kind of seeing it on base happen as well. So like as these events get financialized, like maybe new market behaviors emerge. I don't think that that's crazy. I don't think that that's a crazy kind of like long-term view of the space. It's just like, does Polymarket have enough cash to like stick around during a bear and then realize that on the other way out? Like, who knows?
I mean, didn't they raise 70 mil from the Founders Fund? They should have more than enough cash to stick around in the bear at this point.
Then yeah, I'm in my comment. Then they'll be fine.
Yeah.
Yeah. I think the other question to your point, Ryan, is like, at a point you end up competing with meme coin activity as well, right? People make, like on pump.fun and these other applications, there's a base fund as well. People are making meme coins for all events in markets. There were events related to the Trump incident last week. So, um, I think the question here is if, is Polymarket going to have to then compete with like meme coin activity, right? People are using meme coins as means to basically trade events as well. Like you mentioned, the activity on Pump Fun is a good example. People are making tokens for everything. The Trump incident last week, I mean, there were ear coins, no ear coins, stuff of all this variety. So, you then have to ask the question if these apps are kind of leaning towards retail participants. They're relatively lower liquidity when they start, and they're quick events that happen, in days or hours sometimes. Um, you know, these are the competitors are, a meme coin that people are hoping can do 100x, or a betting market where maybe you're betting on something that's 50-50 or 25-75, and those are your expected outcomes. So I think there's like a fundamental question there of, will retail users decide to go one way or the other?
Yeah, I think that that's right. I think that look, it's an uphill battle. I think meme coins are far closer to PMF. I think that they're very low friction. I think that the payoffs happen quicker, which is very important for retail applications. You want a tight feedback loop and not a long feedback loop. Um, you want to kind of get action like betting on the president like immediately. That's all indications from like consumer application market tell us that those applications are more successful. So yeah, like I'm as a pair trade, I'm bullish meme coins and short poly market, frankly. But like, does a social norm happen where like we expect just like this activity to steadily compound over time? Like, I'm not ruling that out.
Meme coins have had PMF for some time now, though, like 2017. One thing that I wanted to add to this is that I'm not. I think Polymarket's cool. I think like it actually does have. We'll see what happens after the election cycle, but I think it's definitely the only useful app on Polygon, and I would say it's like one of the best apps on the EVM right now. I mean, I can't think of like just consumer facing. I want to start hedging the bearishness of people from now on, because we've been getting a lot of comments about. I think we're falling into Ryan's trap of making everybody. No, that's not true. He's not bearish.
Yeah, I was just gonna say, not bearish, just bullish meme coins. So
Yeah, that's true. That's true. No, I just want to hedge it out so that Zero X Research isn't known as the Bear podcast. That would ruin my ego and my psyche if people knew me as the Bear. Talking about things that you cannot be bearish on, the ETH ETF tomorrow. What are we thinking? Ryan, what's the pair trade here?
Say that again.
What's the pair trade here?
I mean, the most interesting thing about the ETF is the Sol ETH pair. Um, that's the most interesting thing. Look, people try to get in front of these trades. The narrative is that flows just indiscriminately lift prices, that buyers do not care, they cross the spread. However, Sol ETH is up like 30% over the last month. I think, I have my hunches as to why. Like, from a relative value perspective, ETH is trading like at over 300 times TEV, or total economic value, which you can think of as like a price to sales ratios for chains. Solana is anywhere from like 80 to 100, depending on the day, depending on the look back window, right? So there's just like a very obvious relative value trade there. And I think that as the incremental dollar into crypto becomes more institutional than it is retail, then you should kind of see that divergence. There's clearly like less of a bid for like just ETH as the asset, as like fees have compressed in EVM land. Especially like just looking at like you don't need to pay $500 for gas on the ETH L1 to execute a trade. You can just do it on an L2. So just structurally, there's just a little less natural demand in the market for ETH to take advantage of big financial opportunities. So it's not like, I think 3 months ago, if you told people that were happening on the eve of the ETF approval, they wouldn't have believed you. Today, however, like that's the case, and it's unclear to me um, when that trend is going to stop, because frankly, like the next ETF to be approved, given the shift in or the likely shift in regulatory environment that we have coming, is like with a sole ETF, right? So I think that this can compound for a while here.
Yeah, I think the Sol ETH ratio has been interesting. I think for me, I'm just bullish both. I'm really bullish both. Sol's lower market cap, and so it can be moved. The price can be moved easier. So maybe Sol keeps outperforming, on a risk adjusted basis. Maybe ETH takes that back. Um, but I don't see any reason to fade ETH, the asset. It is going to be one of only two with an ETF. And, at around a third, fourth, the market cap of Bitcoin, if you get market cap weighted allocation to the ETH ETF, then it'll probably start to outperform Bitcoin, right? And then you get the ETH flywheel going. Um, with more L2 activity, those act as a supply sink for ETH. Use in DeFi, you start to get more ETH burned, and so I think generally ETH is a little more reflexive than Bitcoin, and so I think all those factors will lead it to start to outperform. And then I think obviously the Sol ETH ratio matters, but also the ETH BTC ratio matters. And if ETH starts outperforming Bitcoin, maybe that's a little bit of a narrative jump that's needed for it to get going. But yeah, I mean, I see no reasons to be bearish Solana as well. So I think they're both great trades, but I will say I do think there is some game theory around the market. You could say the operator, the composite operator, lulling people to sleep with ETH, and then right when people expect it least to perform well, that's usually when it starts to perform well. And then if you go 6 months in the future and look back on this moment, you'll say that it's obvious. And so, I do think that ETH is having a little bit of an identity crisis. Um, Solana is definitely legit competition, but ETH still has all the liquidity, all the stable coins. It has a ton of teams building out L2s competing for usage, which, although they are parasitic to some extent, L2s do return some value to ETH. The respect to ETH being utilized as their gas as the gas token still, so get a monetary premium effect. Their supply sink. So yeah, I think there's a ton of reasons to be bullish ETH, and I think that I think the summertime seasonality component of just slow markets is in the short term, might be enough to make the launch kind of not as impressive as the Bitcoin one once that started to really get going. But once we get into Q4 and potentially regulatory clarity, um, I think ETH is going to do really, really well.
Yeah, I completely agree with Daniel Shapiro. I think ETH is underowned, and I think we're going to actually do really well with the flows. With that being said, crypto always looks for what's next, and it's very clear that Solana is what's next, and I love Solana. So, yeah, we can't give financial advice. None of this is financial advice. We've already heard the disclaimer at the very beginning, but I see no reason to just not own both. I think Ether is God's chosen currency, and it's incredible, and it will do well. And I think but genuinely, I think people kind of underestimate at this point. There's definitely metrics that show that Solana is, I guess, more attractive, especially with the TEV and the fact that all of narratives are currently on Solana. But I think a lot of people are, I guess, underestimating what the ETF flows are going to be like. And obviously, like, nobody has a magic crystal ball, but I don't know. I guess I'm just overall excited for that.
I think to say ETH is underowned, what would the evidence there be that ETH is underowned?
I feel it in my bones.
Yeah, it's hard for me to think that a 400 billion market cap asset is underowned.
Yeah, that's true.
I think there's a lot of ETH out there. People have a lot of exposure.
I guess more so what I mean is that it feels like Solana is becoming a bit of a consensus trade as opposed to ETH, and I feel like people are generally less interested in Ethereum, and I think the flows might surprise, because my entire thinking around this revolves around the fact that, and I assume we want to talk about this later, this institution as the next buyer thing, but I think BTC has a very clear narrative, which is digital gold, but it's not as attractive as Ethereum's narrative, which is it's the app store of the internet, or the internet bond, whatever you want to pick, but it fits into a lot of these. And I think the way that this became clear to me is I was watching the SOHN. I don't know how you pronounce it. Is this Son? Do you know what I'm?
So,
and they pitched ETH on it, and they pitched it with whatever you hear on Larry Fink talk about on television, is that tokenization narrative. And I think that's something that I guess institutions are going to find quite attractive. And I'm not sure if there has been pre-positioning, and I'm not sure if they've positioned already into this, but I expect maybe it's just my side of CT and Twitter, but I feel like a lot of people are expecting the flows to disappoint. I don't think they will. I think the narrative's quite attractive, especially for institutional buyers who like some form of native yield and who like the fact that it's a productive asset.
Yeah, I agree with Bach because I think that price leads narrative, and I think underowned might have been the wrong word to choose, but definitely from a narrative perspective, you have to think ETH is near some type of local minima, right? And I'm not saying Solana is near a local maximum. Solana could still be on the up and up, but I think from a narrative perspective, ETH has been pretty beaten down, and from that standpoint, right? If ETH just gets market cap weighted flows from TradFi and it goes up a lot, and now the price is up, then narrative is going to follow that, and the narrative is going to naturally come, right? And potentially all we need for that is just market cap weighted TradFi flows. So, uh, yeah, I'm very bullish on it. I'm also very bullish on Solana. So I just think ETH might surprise people in if you said that in 2022 around the merge, right? You know, ETH was the hottest thing in town, right? It was outperforming Bitcoin off the lows after the big crash. Like ETH was kind of the consensus winning asset. So to me it's lost that shine clearly at this point, which makes it attractive.
Yeah, I will offer one counterpoint since we're talking a little bit about sentiment here around ETH. Just the comment that I think if you look back like pre-Bitcoin ETF, I would venture a guess that many deep in the space were probably maybe over allocated to ETH relative to Bitcoin prior to that event. And I do wonder like what amount of the sentiment today where people are saying, we should expect, incredible price action for ETH off of, the ETH ETF similar to Bitcoin, how much of that is, people who maybe missed out on the Bitcoin event because they were over allocated to ETH at the time, and now they're maybe still allocated to ETH and expecting the same, price appreciation there. Because it does feel like that was some sentiment at the time as well. Many people, they're like ETH is the future, and they went all, in terms of allocation of their portfolio. They may have gone heavier ETH than BTC and then did not get that reward when that when the BTC ETF came around, and we've seen what happened to Bitcoin.
I mean, we'll see. Trading starts tomorrow. You're right. I do remember that, where everybody was like, "Oh, just own Ether, man. It'll be better." But we'll see. Trading. Ryan, do you have any final thoughts?
Yeah, I mean, I think just hoping for flows is not enough. I think you need some identifiable catalyst from a revenue perspective. And like if you look at what ETH is trying to do, they are trying to minimize the amount of value capture that they have. And Solana is trying to do the precise opposite with something like Fire Dancer. If you look at like DEX volume market share, there's a clear trend toward Solana, Arbitrum, and Base and away from ETH. Now you can push back and say that that's by design, but just because something is by design does not mean it is good for value capture market, right? So like, I don't think that TradFi, I think that like these guys are data dependent. I don't think it's the same market participant that we've traditionally had. And as the space learns, or as TradFi learns more about this space, I don't know if simple like flows and market cap weighting is enough, especially in a nascent asset class. And like look, ETH is a $400 billion asset. It's probably like a top 30 asset in market cap in the world. It's not cheap. And I don't know. I just don't think that TradFi indiscriminately buys. I think that they'll put pen to paper on this. And it's not obvious to me that there's just like a massive bull case for ETH for them to allocate to.
The counterpoint to this is that Solana has downtime issues, which might freak traditional buyers out. But yeah, I guess like what you say makes sense. It's not a particularly cheap asset. I get what I've heard or like read on Twitter about ETHCC is that this was one of the main discussion points, and it's this leaking of value to not only rollups but also app chains, and generally losing value accrual to Ethereum and activity, especially because of just complex UI. Modularity is bad. Like at its current state, it's bad. And ETH made that bet. But I mean, like if you look at what Vitalik was talking about, and that's reducing block times. And as far as I've seen, like basically every talk was on some form of abstracting away of UX issues. I don't know how that would help leaking value, because at the end of the day, I think you're just making it easier to leak value and you just don't let the customer realize it. But they definitely do have an issue in terms of what direction they're going in. Like I completely agree with you on that, is that just because it's on purpose doesn't mean that it's good. I would have probably preferred just keeping all activity on ETH and making people pay $300 per transaction. At least it's really safe, you know. Before we move on, let's have a quick word from Pancakeswap. Thanks to our fantastic sponsor, LayerZero. What's up, guys? For this week's LayerZero snippet, I'm joined by the head chef over at Pancakeswap, Chef Kids. Thank you for joining us.
Hi, Tim. Thank you for having me here.
Just to start us off, do you want to give a short introduction of Pancakeswap and what you guys have been focused on over the past few months?
Yeah, for sure. So Pancakeswap is a leading multiple, chain decentralized exchange that operate on, AMM model built on several chains. We're originally built on BSC, but gradually we expanded to different chains. Currently, we're operating on 9 chains, and we launched in 2020. Pancakeswap is one of the most popular DEX in the cryptocurrency industry due to, its lower transaction fees, high speed trading, and also the user experiences. And also currently we have over 750 billion in total trading volumes and over 2 billion in total, liquidity locked. And we are, making it, as a leading multi-chain DEX in the industry.
Perfect. And how does LayerZero fit into Pancakeswap?
Well, LayerZero, plays a crucial role in our journey into a multi-chain DEX because, since 2022, we have been fortunate to collaborate with, strong cross-chain partners such as, LayerZero. Their robust cross-chain messaging infrastructure has been pivotal to our evolution from, BNB chain predominantly based platform to a resilient multi-chain DEX. And as I mentioned, currently we're operating across 9 chains, including integration to Ethereum ecosystem. And moreover, Pancakeswap has become, the preferred trading venue for a lot of, OFT projects such as PAP, EtherFi's, We, ETH, and also USDV. LayerZero also powers, Pancakeswap's cross-chain gauges, facilitating the seamless movement of cake tokens anywhere through the OFT standard and also enabling voting across chains. So as one of the pioneer in adapting the OFT standard for our cake token, Pancakeswap has been partnering with LayerZero since 2022 to establish, crucial bridges. So in summary, LayerZero is, integral to, Pancakeswap's cross-chain operations, significantly enhancing our platform's functionality and also adaptability. This integration actually enables a fantastic user experiences and introduce a lot of innovative features that distinguish us in the DEX sector.
Perfect. Yeah, you guys have had a great multi-chain expansion, especially over the past year. Do you have any exciting plans over the next 6 to 12 months?
Yeah, absolutely. We have several exciting plans in the, in upcoming months' time, including 2 major products. Firstly, for sure is our, Pancakeswap V4, which we covered in depth, already in our previous podcast with you guys. So currently it's on track, to launch in Q3 this year, and we'll start with BNB chain and Ethereum, and also will be followed by many other chains. For the benefit of those who might not be familiar with us, I will give a little bit an elaboration on Pancakeswap V4. So basically, Pancakeswap V4 is the latest iteration of our DEX, where we introduced several key features. The first one is definitely, the flexibility via hooks, where we can bring in new features such as dynamic fee, customer oracles, and a lot of other things. The second thing is adaptability, where we can support new AM models on the go. And lastly is the efficiency enhancement via gas savings, from flash accounting and singleton technology. So we have a particular, including myself, we have, very excited about the hooks. As with developers, the sky is the limit. Nobody knows, what, developers can come up. And we are very excited as well. So who knows, maybe, we'll see LayerZero, hook that utilize cross-chain liquidity for OFTs, right? And also importantly, we understand, on the whole V4, V4 thing, the dev support is the key, So for developers, guys, if you are, who are interested in building, please visit our website and where you will find most information you need. And also you can join our Discord community. I do look forward to see what you guys can come up with. The second product we are currently working on is to enhance our users' swap user experiences. We aim to secure the best price for users by tapping into the liquidity from multiple sources and also leveraging our cross-chain liquidity network. This is, all the alpha I will share here so far. But if you guys, if you want to know more about us, about this product, please stay tuned. Stay tuned about, our upcoming product announcement. So in essence, our strategy revolves around enhancing our, core swap product with the best-in-class technology while ensuring our robust supporting functions. So we're thrilled, especially myself, I'm very thrilled about what is ahead of us, and do look forward to sharing more update in the upcoming several months time with our community soon.
Perfect. That all sounds very exciting. I'll make sure to link the Pancakeswap episode under this one as well, because that should contain a lot of alpha.
Yeah.
Thank you so much for joining us.
Thank you. Thank you for time. Thank you.
One thing I kind of touched up on that I want to talk about, that I want Ryan to talk about, is what happens when the marginal buyer of crypto is institutional.
Yeah, we kind of just touched on it. Thinking, I think one very obvious place that things go is more cash flow oriented. I think it's very obvious that once TradFi comes to this space and they understand it deeply, tokens accrue cash flows, most of them. And like everything on the planet that does accrue cash flows is to some degree valued on the basis of those cash flows. So I think you'll see the market kind of orienting around those assets. I think things will obviously get a little less crazy. I think like there will be vol compression in a lot of assets. I think that like as you go down the risk spectrum, like your kind of airdrop opportunities kind of dwindle over time because it won't be a secret anymore. Now, obviously, like a lot of this is far off, and I think of you have to think of like what's coming first, and like I think vol compression and like orienting toward valuation are like two kind of obvious, more like near term, maybe like 12 to 24-month things that you should start to see in the market, assuming all goes well on the crypto regulation front by December and onward, or sorry, November and onwards.
I definitely agree with you in terms of vol compression. Um, where I have, I guess, slightly more questions, and obviously you'd have a better idea about this than I do, but it was TradFi that created the 2000.com bubble. It was TradFi that created the real estate bubble. At the end of the day, humans are emotional, they're greedy, and I will say having some way to value protocols, right? And obviously a cash flow based, DCF model is one way to do that. That would tether some valuations um, closer to reality, but I don't think TradFi entering the market is going to lead to, um, I guess, less bubble like behavior in the long run. Um, I think TradFi is kind of this nebulous word, and I think there's still probably a vast majority, or I'd say the vast majority of TradFi probably are still, um, you know, not these hyper sophisticated actors by any means. There's definitely going to be actors that come in that are highly sophisticated and are going to outcompete crypto native um, participants in many different ways. But I don't know. I think based on kind of observing markets over the past couple decades, I tend to lean more towards uh, the theory of reflexivity being kind of the main basis of how I believe asset prices move, as opposed to everything kind of having this value and things kind of um, you know over time going towards that fundamental value. So um, we'll see though, right? Like I think right traditional markets have circuit breakers and they have different rules around trading. If you have 24/7 global, tokens that are being traded, I think that we're still going to have some, crazy volatility moments. Maybe, vol will be compressed generally, but yeah, I'm curious what your guys' thoughts are around that.
The main thing I think about is how this will affect, I guess, lower market cap tokens, and more so like, will there still be an edge in? I feel like the word trenches is now overused, but like being in the trenches, I guess, like just spending more and more time in small to mid market cap, like sub 100 mil, like looking into those. Because at the end of the day, we've always experienced this thing where, or at least over the past few years, we've seen where, as Bitcoin and ETH do better, a lot of money flows into lower market cap tokens. But I think that's with the expected notion that, okay, like these buyers are going to come and buy from us. But I don't really see, I guess, traditional financial players buying into some random Telegram bot token on a random chain that's sub 100. You know what I mean? Like I don't see how that would affect it. I feel like the vol there would just stay the same because we already have our own money that we play around with, like sub whatever market cap, and that's for us. And I feel like that wouldn't change too much.
Yeah, I'm hearing a lot of good points on both sides of this spectrum here. I think to Daniel's point, especially around just the animal spirits of people that interact with markets. I think you can look back to 2021 and Baki just mentioned like, what institutions are going to buy 100 mil market cap coins or lower. Maybe they won't, but we had, we had artists and rappers and large institutions and I think even banks in some cases that bought like NFTs to put them into their collections at that time. There was some very crazy behavior going on in 2021 that I think no one expected prior to the heights that the market reached at that time. And I think we can sit here and kind of like ask the same questions of like, will those people buy these things? Like, is someone going to buy this tiny market cap token at a fund? But ultimately, I think you don't really know until it the insane crazy market moves happen and people get wrapped up in the price moves. It's like Daniel mentioned, it's the same as the dot-com bubble. People were paying hundreds of multiples on earnings or maybe no earnings for stuff that just didn't make sense, but they get wrapped up in it. So there's always the chance for people to just go crazy about wild price swings.
When we had that, I met a few analysts from banks, and they were shitcoining as well. Like, so obviously they're not, just because some guy's shitcoining doesn't mean he's gonna make the bank buy into it. But what I mean is that I feel like there's this general notion that bankers are gonna come in and buy our bags. That's probably not true, but we have to see, is what Danny thinks. We have to wait a bit. Maybe they will. We've had crazier things happen. But the second notion is that bankers don't know what's happening, or like TradFi doesn't know, and I don't think that's true. Like that hasn't been the case, let's say, for a few years now, and a lot of these like analysts they hold crypto, probably more than a lot of people who say, oh, bankers don't know. So I also see them, I guess, maybe as like the asset class becomes a bit more legitimized and in their boss's eyes, they might be able to participate in it more. But we'll see. I don't know how that side of the world works at all.
I think the other point of it is like you mentioned the multiples on. I think the vol compression is a good point. I also think like just multiples compression on smaller caps as Bitcoin makes moves. I mean, you can see this very naturally if you go back and look at the charts, right? Like hitting 100,000 X's on all the random coins that came out in the ICO mania in like 2017, and then you go and you look one cycle forward, and it's like slightly compressed to lower multiples. And then if you look today, we haven't. There are a few cases, right? Like there's meme coins and there's specific coins that go on chain from 100K market cap to 100 million, a billion, and those are wildly insane. But on the average and on the whole, the across the board, those multiples they have reduced over time as the asset class has grown. So I think it's natural to just expect that to continue as well.
I think another major thing will be the indexification of the space. And so I think somewhere around 60% of all money in traditional markets are in some type of ETF or index. And I think it's around 67% of new money coming into the market is literally going directly into target date funds, which are effectively index, ETFs that then also, as you get older, closer to retirement, change the allocation of your funds over time, maybe becoming more heavily allocated to bonds, for instance. And so I think there will definitely be, top 10 index, top 50 index, top 100 index, the 250, the 500, right? All market cap weighted, maybe equal weighted. Maybe there'll be sector indexes, right? Like layer ones or AI or whatever, right? And so there's, the marginal buyer, honestly, it's probably mostly retail through 401k flows, and all that's passive. So, um, that's another interesting component. And I think the result of that is vol compression, but not necessarily. Um, well, all right, not necessarily multiple compression due to the market cap weighted dynamic. And Mike Green is someone excellent to listen to kind of better understand those dynamics at play.
Yeah, I don't disagree with a lot of the points. I think that yeah, in your small caps, just they're not going to play, right? They're not going to play. The market's not going to change. You could have quantitative funds that run sophisticated strategies, right? Like these are like permissionless, like open APIs. It's going to be easy for like like today, right? You can like download Twitter data, figure out what's trending, and then long things on pump.fun, right, with an LLM. Pretty trivial to do. I imagine more people are going to do that. But like, look, things are still going to be crazy, right? It's like a totally open and permissionless market. Um, just some data I wanted to draw some attention to. My buddy actually sent me this morning. Small, mid, and large cap indices, and just like the valuations over time, um, they don't become untethered. Like, yeah, bubbles happen in TradFi, but like, so for example, like a small cap index, the forward price to cash flow ratio has never risen above 19 times, like never. It topped out around 17 in the early 2000s, topped out around 17 in like 2014, 2015, and then around 17 or 19 looking at the chart in like 2022. Same thing with like small cap value. Small cap value, like that forward price to cash flow multiple has never surpassed 13 or 15 times looking back 20 years. So like there's some degree of discipline, right? Like people look like there's some degree of discipline. Eventually you run out of buyers. Even in manias, things like people start to realize like this can't go on forever, and you don't have like the Filecoin 150 billion FDV event. I think that's unique to crypto. And I think that as the marginal dollar changes, mostly in the large caps, right, you're going to see some behavior change. But look, we'll still have our fun. It's just not going to be in the same places, I guess. Sorry, I just read a chart to you guys. It must have been painful.
No, it's good.
That's really good data. It's really good data. And honestly, like I guess you could say we're starting to see that trend now with the whole FDV low float discussion, right? Like people are getting smart. The market is evolving.
All right, last up for today, I think we want to talk Aerodrome, right?
Let's do it.
So, Daniel Shapiro, you wrote the best report on Aerodrome last week. Do you want to kind of talk about it a bit?
Yeah. So, kind of the idea behind this report was to target the leading protocol in the base ecosystem, and I'm very bullish, and I think Blockworks Research is in general very bullish on base. Just looking at their growth in terms of number of transactions, number of active addresses, TVL, stablecoin growth. Um, it's all the metrics point to that ecosystem is growing very rapidly, and there's also fundamental reasons for that. For instance, their smart wallet, which abstracts away the need for having to create some type of software wallet, and passkey. It provides a passkey way to log in, um, and also basis. I guess you could say their customer base, which is 110 million, but I think closer more like 10 million active users. But still, nonetheless, they have a ton of users to direct towards the base ecosystem. And so, um, very bullish on base. And so, getting into what Aerodrome is a decentralized exchange that is a fork of Velodrome. It is a specific deployment for base because the team expects there's going to be kind of unique offerings, institutional offerings that base provides that other chains don't, to where they will need a separate, unique deployment on base itself. Um, what makes Aerodrome unique compared to a DEX like Coinbase or like Uniswap, um, is that it uses a vote lock governance model similar to Curve or Convex. Um, and this model actually gives the token Arrow utility because LPs must lock that arrow, um, in turn giving them governance power to direct where the protocol emissions go. So you lock your tokens, you pick a pool to direct emissions to, and in turn, you capture the fees associated with those pools. This also creates a flywheel effect in which obviously the highest volume pools are going to attract the most liquidity because, right, any rational LP is going to want to maximize their fees, and so they pick the highest volume pools. And so what's unique about this is it allows new projects launching on the chain to see liquidity for their tokens. And so not every project is going to be backed by top tier VCs and have access to um, top of the line market maker deals or, centralized exchange listings day one. So they might need to launch on a DEX to, like Aerodrome to see liquidity for their token before they grow large enough to eventually get listed on centralized exchanges. Um, and so what's interesting is due to the regulatory environment and Base not having a token, in the absence of a Base token, currently I'd say Arrow, at least my thesis is kind of like the gas token of Base, right? Like if you think about all the users of Base, you have like the kind of retail consumer users, they're just interacting with the chain. You have protocols that are launching and might have a treasury to deploy, and then you have farmers or LPs that want to come to that chain and supply the picks and shovels, right? Someone that wants to come and provide liquidity on a DEX, right, and get fees. So other than just like the base consumer users, the other two categories of major users of the chain will need to buy Arrow tokens, and whether that's to seed liquidity for their token, which is a necessary precursor for adoption, or that's maybe to buy Arrow tokens to deploy some of your treasury reserve to actually make money um, off of your the tokens that you already have. And so it's a really interesting way to kind of bet on the base ecosystem in aggregate, and the Arrow token should theoretically um, do well so long as the ecosystem does well. And I think what's interesting about it too is for funds that might have a mandate uh, where they are not allowed to invest in meme coins. Um, Arrow is a way to actually kind of get meme coin beta exposure because a lot of the largest pools on base are meme coin pools that were launched on Aerodrome. And so, you know, if base does onboard a lot of retail and that retail likes to speculate on meme coins, and there was some indication of this in late February and March, in terms of base trend, DEX statistics, just growth in general exploding around that meme coin craze. Um, Arrow is a token that could capture some of that value. Um, and they have a very strong team. The team, their initial distribution of 14-15%, they max locked their entire distribution. So they can't sell any of their tokens. Um, the team does get 5% of protocol emissions, but they have max locked more than 90% of those. And so in the report, we show the team wallet and do an analysis there. So the team's all in, right? They can't sell anything. So they're the in a few weeks at Epoch 67, um, the overall, all Arrow hold governance token holders, VE Arrow voters will vote on the future monetary policy of the chain, and they can adjust the annualized emission rate by like 0.25% each epoch. So it can the emission rate could theoretically change, but in general, the team is committed, and there's no like immediate supply overhang that could come onto the market. So It's an interesting token and an interesting way to get exposure to the base ecosystem in aggregate.
Yeah, I think that the most interesting thing is just like the besting of. I mean, a lot of that's super interesting, and one of the most, I should say, interesting but compelling things is that it's really besting Uniswap right now. To outperform such a name brand is not an easy task.
Yeah, we had them on the pod, so if any of our listeners want to also listen to the team coming on and explaining how it works, you can also, we'll put a link somewhere. But that's one thing they've done really well is integrating other, the way that you said, like it might become the gas token of base. I they've done really well just working with other people on the ecosystem and like other protocols and helping them out, kind of, I guess not incorporating them. I don't like the word partner, because they're not partnering with them. They're just like trying to build an ecosystem altogether because they want to kind of become the liquidity hub of there. And I think Uniswap obviously doesn't have to do that, and they're not doing that. Versus Aerodrome is very like actively doing that. So I think that's one thing that they've done really well. Um, and I really like the idea that it's exposure to base. I agree with you. I don't think I know a few funds that have tried to gain exposure to meme coins, especially since that's what's mostly happening on base. It's always tough versus Aerodrome is like direct exposure to base and the base ecosystem, as well as whatever DeFi we're at now, DeFi 4.0, 3.0, 4.0. Like it is a new like VE free dexes based on Andre's solidly model, Andre Cronje's solidly model. Like it's a new primitive, and I don't know like exactly how well it works. To be honest with you, I know it had some issues with solidly, and it has had issues since then. But I know that the Aerodrome team, like they built it out, and it's working well, especially on base.
Yeah, I think great points on it being an opportunity to sort of make a bet on base the ecosystem, because I think, many market participants, like Bach said, like meme coins have been one area, but it's obviously a bit different, right? You're not really, when it comes to a meme coin, you're either going to hit a massive multiple or lose it all in many cases, and you're not, the linear growth of the ecosystem might not be really reflected in how that meme coin trades. But the other option has really just been like Coinbase stock, for example.
Yeah.
But I think in that case, that's not really a direct trade on base itself, the chain, because there's obviously lots of verticals that Coinbase is going after, and base is not the only thing that that they're making money on. So it's definitely it's an very compelling argument, I think, for in the absence of a gas token for themselves. Like we saw in 2021 when people went to the Alt L1 chains, they bought the gas token and they bought the primary native DEX token. So in this case, when there's a lack of a base token, and there is a kind of what we're seeing is sort of this primary native DEX that you can trade, it's an interesting opportunity.
Yeah, and it has nearly twice the TVL, well, more than twice the TVL of Uniswap at this point. I wonder when this is going to happen again, but I remember like throughout the bear, I was really focused on, I guess, building like a mind map of native apps on chains. And I think, first of all, it's gotten increasingly hard because there aren't that many apps launching, but also because you see like Uniswap dominate and Aave dominate, and like let's say Morpho in this case as well, like especially on newer chains. So I guess I'm also just interested in Aerodrome because it's a native app and it's like only for base, and I like that idea a lot more than I guess Uniswap dominance all across, because I want to try out new stuff. Like it might not even be particularly efficient. This is not a jab at Aerodrome, but like in general, I know like sometimes we like to launch apps that aren't even particularly efficient. Like you could have just used a Uniswap V3 fork, but I like trying out new stuff, and it's even better if it's native to the ecosystem.
Yeah, and it's positive for the thesis as well, right? Like if it was just Uniswap again, I don't think it would make sense to want to buy Uni as a proxy for bidding base, right? Like
Yeah.
it doesn't make sense because of its existence and value elsewhere. But in this case, it's a bit different, right? It's unique and native to Base. There's no specific Base token to bid other than the stock or to gamble on memes. So very compelling.
Yeah, and when you have a native app, they actually have to work with one another to make sure that the ecosystem does semi well. Like I mentioned before, Uniswap has no skin in the game for Base. Technically, they'll be fine either way. They're established.
Yeah, like I think it's important to look at incentive alignment a lot, and this is another reason why newer tokens typically outperform old tokens because the team has an incentive to reach that big liquidity event, right? And so incentives really matter. And Arrow gave, I believe, let's see, 25% of 25% of the initial voting power was reserved for a base ecosystem goods fund. So they are they also launched with 20 other base partners where they immediately established liquidity pools. So they're very locked into the ecosystem. They want it to succeed. Um, Also, Coinbase Ventures made an investment in their team, so Coinbase wants them to succeed. Um, so there's a lot of incentive. The team max locked their tokens, and any new tokens that come in, they max lock essentially all of them. Their stablecoin supply was generated from actually locking tokens and getting rewards, as a user. So you'd like to see that, and if you're going to make a bet on a project, um, I think it's a good project to bet on. I think it still has some emissions to distribute, right? Potentially making it reflexive, which we saw, right? It's going to go up a lot. It's going to drop a lot, in with respect to the price, but it's still, in terms of circulating, sub-billion-dollar market cap, um, which means it has some real upside, especially if base takes off. So just from kind of these other points that might be a little less discussed, um, there's a lot of positive signs around the project.
My producer's gonna love this, man. He's big, big. I wish I could pull up the Coinbase. Brian Armstrong bald, the bike picture. I don't know if you guys have seen it. Pull it up if so people aren't looking at or listening to this and thinking it's weird. Mark, if you can. Um, do we have anything else we want to mention, or do you want to end it on my awkward explanation of Brian Armstrong's picture?
Well, people that went to base early might have gotten rugged on the bald token, but maybe Aerodrome is a new opportunity.
Not financial advice, guys.
Not financial advice.
It's not financial advice. Nothing is financial advice. Okay. Ryan, Daniel Shapiro, thank you for coming on and talking.
Thanks for having me.
First pod. Thanks for having me on. That was fun.
Great.
I always love the the thank you at the end, multiple responses, and then a smile from Ryan. It's great.